Hey, what's up guys? It's Ezekiel Chiu here. So let me hit you with this. Most traders, they look at the order blocks just like another zone on the chart. But that's why they keep losing. So an order block is not just like a box that you draw. No, this is the footprints of institutions. This is a story where the banks, they load up, where they trap the crowd and then they drive the price. So if you trade it wrong, it fakes you every single time. But if you trade it right, suddenly you're riding with the smart money and not against them. So here's the truth. Order blocks, they are not levels. They are like weapons. And today, I'm breaking down the exact framework that I use from confirmations to breaker blocks to execution models so that you can finally trade the order blocks like the institutions. Stick with me because once you see order block this way, you'll never look at the chart the same way again. Right, so first thing first, order blocks, they are zones, right? Where the institutions or the smart money, they place large buy or sell orders. And these areas, right, they matter because when price returns, they spark strong reactions at those areas. So in short, they review where the big capital have stepped in, right? So you usually spot an order block as the last bullish candle before a strong move down, or the last bearish candle before a strong move up, right? And that's the footprint of institutional orders. So a clear push that shifts the market structure. So spotting order blocks is not enough. To trade them effectively, we need a way that we can filter from the strong to the weak, right? Kind of setups. And in order for us to do that, we need confirmations. And that's what we are talking today, right? We will go beyond spotting order blocks on the chart and uncover what really makes them powerful in trading. All right, so now, trading off a single time frame is like you trying to read a map with one eye closed because you always miss the big picture, right? That's why our first teaching matters, the multi-timeframe confirmation. All right, so this gives you the big picture versus the small picture lens, right? The higher time frame, it shows you where the real order block is, and the lower time frame, it tells you if the market is actually reacting to it. In short, this approach, it filters the noise. It avoids all the fake setups. It gives you the clarity which block deserve your attention. That is the key in trading. All right, so now here's how it works. All right, you start with the higher time frame. For example, say the 4-hour chart, right? This is where you identify a key order block, right? The one that is formed by significant institutional activity, right? So you have to be aware, right? Which ones are valid or not, right? So on its own, that zone itself may look tempting to trade right away, right? To trade immediately, but having patience is the key, right? What we want to do is to wait for price to go back to that level, test that higher time frame order block, right? And only then do you prepare for the action. Okay, now it comes the confirmation step. Once the price, it touch the higher time frame order block, all right? Here's what you do next. You drop down to the lower time frame. For example, the 15-minute chart, right? This is where the story, it gets detailed. All right, so now, on the lower time frame, what we are looking for is proof. Proof that the market is actually responding to that zone. So it could be what? It could be a bearish engulfing candle, right? This shift in structure or momentum that is clearly flipping its direction. So without this confirmation, you are just guessing.
Alright, whenever price hits the order block, I'm gonna enter the trade.
No. We wait for confirmation. Right? With this, we are now trading with alignment. Right? Think of it like a double lock system. The higher time frame, it sets the stage for you. Right? That's where the heavy money is being placed over at that zone itself. The lower time frame, it acts as the key, right? It tells you if the door is really opening, right? When both of them, they line up, right? The odds of a successful trade, it increases dramatically. So you are no longer entering just because, oh, this is an order block, I'm going to enter. No, you're entering because you have both map and the compass pointing in the same direction. All right, so now from here, execution becomes simple, right? We can enter when the confirmation appears good, right? Then what? You place your stop loss where? Just beyond the order block. That's the key, right? Order block zone can be tested again. So that's why we got to place our stop loss beyond the order block. All right? And then you set a take profit, right? Usually where you want to set it at the next reaction level, the next resistance, the next support level, right? And ideally speaking, the risk to reward ratio should be at least twice your risk, right? So that way, even if only say half of your setup works, we are still ahead on this game itself. So now, to make this easier, right, here's a cheat sheet that you can rely on, right? So just remember this pairing, all right? So here we go. The weekly order block is confirmed on the 4-hour time frame. The daily order block is confirmed on the 1-hour time frame. The 4-hour order block is confirmed on the 15-minute time frame, and the 1-hour order block is confirmed on the 5-minute time frame. There you go. All right? Take a screenshot of this. All right? So when you align the bigger picture now with the smaller picture, right, you move from guesswork to precision, right? This is what levels you out, all right, levels you up from a typical order block trading itself. So far so good. Now, when an order block fails, does it fail? It does, right? Not all order blocks is going to hold all the time, right? The market moves, right? So when an order block fails, it doesn't die, right? This mutates into one of the most powerful weapons in trading. That is the essence of breaker blocks. Hey guys, Ezekiel here. So let's be real. Trading crypto is always about what? Speed, control, fast execution, and low fees, right? So this is where Phemex really shines. Now, from that, here's where it gets interesting. Phemex takes a hybrid approach. It is actually the first ever semi-centralized exchange that gives you the best of both worlds. The speed of a CEX and the transparency of on-chain trading. So now, what is even better is how complete it feels. You've got basket orders for your multiple trades, right? You got iceberg orders to hide the big moves, and you got scaled orders in USDT for precise entries. You can even adjust your slippage tolerance to control the fills, right? Now get this, Phemex is the first crypto exchange to offer OCO orders for contract trading. Now, this solves one of the most biggest pain points that traders face. Plus, you also find multiple watch lists, sub-accounts, on-chain trading, and BTC vote savings. Cool? So now, if you're into Web3, there's what? There's Memex for meme trading on Solana. There's their Phemex Pulse, their social fi space, and the Soul Pass, which is your key to the Phemex Web3 world. So check out Phemex through the link below, and you're gonna get 4,800 USDT in welcome rewards. So, breaker blocks is what happens when a valid order block, it gets broken, right? So now, instead of seeing it as a loss if you entered the trade, for example, we flip this into an opportunity. All right, so because no matter how sharp your analysis is, not every order block will hold. No, right? Breaker block gives you the strategy for those failures. All right, so now think of this like this, right? A breaker block is simply what? A previous order block, right? That price no longer respects. Once it gets broken, right, that level, it doesn't lose the importance. It just changes the role, right? So, for example, what used to be a zone of demand will now flip into a zone of supply, right? And vice versa. So when price returns to that level, it often rejects, giving us a new setup itself. All right, so now here's an example, right? We identified a bullish order block, okay? Now, price surged up. It created an inefficiency and even break the structure. So, by all rules, this is a valid, right, order block itself. Now, instead of continuing it higher, the market shift, right? And the market comes down hard, right? And it breaks below the order block. So at this moment, the bullish order block has now failed. All right. But now, when price pulls back up to the same zone, it often acts as a resistance. So this is your chance to short the market. Okay. Right. So, okay, let's pause here for a moment. So before that, when price comes back down to that order block, assuming this is a higher time frame, had you entered right away because it's an order block I'm going to buy off right away, right, you would have made a loss. But had you used the multi-time frame approach, which I told you earlier, you drop to the lower time frame, you wait for confirmation when price breaks back above, and then you enter, you would have avoided that trade because none of that happened. As you can see, right, this is a big bearish bar that just keep dropping right away. Get it? All right, so now that this order block has broken, price goes back up to test the resistance zone. Same thing. It does not mean that we enter for a sell trade right away. No. All right, so now, once we identify the breaker block, all right, so this is what happens, right? It shows us that the institutions who once bought at that level are no longer defending that level, right? So in fact, the selling pressure is strong enough to break the order block, right, so fast as what we saw, right? And it's now likely to use that same area to stack new positions. All right, so now, retail traders would probably still see it as, okay, this is a buy zone, right? No, but the smart money, the smart traders will now recognize that, okay, this is now a breaker block, right? This is a trap that will work in your favor if you trade with it and not trade against it. All right, so now, to trade the breaker block, we first wait for the break. Then, here's what happens next, right? When price retests it, that's your entry zone in the opposite direction to go back down, right? So we place our stop loss where? Just beyond the zone, right? And then our take profit, we aim it at the next support or resistance level, right? And we want to, same thing, the risk to reward ratio, we want to make sure that it's at least 1:2 or more. All right, so this is how, for example, most people would fail down there, we did not enter the trade, and then we turn those people failures into our fuel to get in on a reversal trade downwards itself. Right, so now, next. So, spotting an order block is only half the game, right? The real power comes when you master the art of execution. That's where the execution model comes in. Quick pause. If you found this video helpful so far, here's something that always surprises me. 73% of you who watches this video regularly haven't subscribed yet. I mean, if you're getting value and want to support what we are doing, the best way is just to hit that subscribe button. It's free and really helps us to continue creating better content for you every single week. It truly means a whole lot to us. Okay, now let's get back to it. So, this gives you a precise method of entering the trades, right? So that you are not just guessing anymore where to buy or where to sell inside the zone itself. Execution, it turns all this order block from theory into precise action. Alright, so there are 4 main ways to execute inside an order block. Number 1, the wick entry. Number 2, the body entry. Number 3, the midpoint entry. And number 4, the closing beyond entry. Alright, so each one has its own logic, its own balance of risk to reward ratio. Right? So I'm not saying one is better than the other. You can decide yourself which one works best for you based on your level of risk to reward ratio, your aggressiveness versus your conservativeness, for example. All right, so now first one, the wick entry, which is the conservative approach. We are entering from the very wick of the order block zone. All right, so we place your order at the wick of the order block. All right, so this increases the chance of the trade getting triggered, right? Since price would often tag the wick before moving away, right? The trade-off is that in this case, you got a wider stop loss, which lowers your risk to reward ratio. So the wick entries, they are best when you want higher certainty of entry, even if the returns are smaller. All right. Now next, number 2, the body entry. So you are basing your trade on the body of the candle. You enter at the candle body rather than the wick. So your stop loss is just beyond the wick, right? This gives you a tighter stop, and it improves your risk to reward ratio. But here's the catch. Price sometimes will only tag the wick and reverse without touching the body, right? Leaving you behind. All right, so now this is a model for those who prefer a more sharper precision, right? And a better RR, right? But can accept the risk of missing trades. All right. Now, the third one, the midpoint entry. All right, so now you're entering from the midpoint of the order block, right? And it's like the sweet spot for most of the traders, right? So what happens here is that you place your entry at the midpoint, right? With the stops just beyond the extreme, right? So this kind of balance the other two worlds where it has a higher probability of entry, right, than the body method, right? And a better risk to reward ratio than the wick method, right? So this entry is a refined way to kind of like squeeze more profit from each setup while still protecting with manageable stops. So now for all these 3 methods, the flip side of getting a better risk to reward ratio and entering earlier, you have the cons, right, of the trade not working out, right, and the order block fails with your entry in it because you didn't wait for price to close below, for example, in this case, or beyond the order block itself. All right, so now here comes method number 4. By using the closing beyond entry, right, and in this case, the close below the order block, you increase the probability of the order block working out, right? So now the cons of this is that if you place your stop loss at a typical area, right, you will now have a not so good risk to reward ratio, right? Because your risk can be pretty big itself. All right, so now one way you can do it is to reduce your stop loss and place your stop loss instead of at the edge, right? Place it somewhere in the middle of the order block, right? Above the high of the candle that broke downwards. Get it? Right, so now the beauty of these 4 execution models, what you have is flexibility, right? Because no 2 markets, they behave the same, right? There's no 2 scenarios that feels identical. So by learning all 4 of them, you can adapt to the conditions, and instead of forcing, say, every trade, I just got to enter only one way, one rigid plan itself, right? Whether you want safety, precision, or you want balance, or you want aggression, all right? You have a model that is ready. All right, so now let's wrap it all up. Order blocks are not just about spotting rectangles on a chart, all right? They become powerful when each part of the process works together in a system. So the multi-timeframe confirmation, it gives you both the big picture and the fine detail, right? It helps you separate the strong setups from the weak ones, all right? And then you zero in on the zones that truly matter, all right? Then, as you know, not every order block is going to hold. that's where the breaker blocks step in. So instead of saying, oh, this order block is a failure, these breaker blocks, they flip, right? To show you fresh opportunities. Therefore, you have opportunities all the time itself, right? So this will give you the market new direction and then allow you to trade in that direction with momentum itself. Now, obviously, with all the confirmation ways of entering, like I told you, right? So then I taught you about the 4 execution models, right? The wick, the body, the midpoint, and the closing beyond, right? So when you couple all of them together, you now have a strong way of using order blocks to enter in line with the smart money and trade in line with them in their direction that they have, in a way, right, push towards too. Good? Okay, so here's what to do next. I want to give you something that's going to change the way that you trade forever. So I've put together a free training that walks you through the exact 3-step system that I use to find high probability trades with sniper level entries, real risk control, and zero guesswork. So this is the same system that I use myself, and the same one that has helped thousands of traders go from frustration to consistent wins. And I'm giving it to you for free, right? There's no fluff, no fueler, just pure strategy. So if you ever wanted to trade with clarity and real conviction, this is the place to start. So click on the link in the description below, and I'll see you inside the training.